Stocks are one of the most popular investment options for people looking to grow their wealth. However, for many beginners, the world of stocks can be confusing and overwhelming. This guide aims to provide a basic understanding of what stocks are, how they work, and why they can be a good investment option. What are stocks? Stocks, also known as shares or equities, represent an ownership stake in a company. When you buy a stock, you own a small piece of the company and become a shareholder. As a shareholder, you are entitled to a portion of the company's profits and have a say in important decisions, such as electing the board of directors. How do stocks work? Stocks are bought and sold on stock exchanges, such as the New York Stock Exchange, NYSE, or the NASDAQ. Companies can issue stocks to raise capital, which can be used for various purposes, such as expanding the business, investing in research and development, or paying dividends to shareholders. When you buy a stock, the price you pay is determined by supply and demand. If more people want to buy a stock than sell it, the price will go up. If more people want to sell a stock than buy it, the price will go down. As a shareholder, you can make money from stocks in two ways: capital gains and dividends. Capital gains. Capital gains occur when you sell a stock for more than you paid for it. For example, if you bought a stock for $50 and later sold it for $60, you would have made a capital gain of $10. Dividends. Some companies pay dividends to their shareholders as a way of sharing their profits. Dividends are usually paid on a regular basis, such as quarterly or annually. Why invest in stocks? Stocks have historically provided higher returns than other investment options, such as bonds or savings accounts, over the long term. Additionally, stocks provide the opportunity for diversification, which can help reduce risk in your portfolio. However, it's important to remember that investing in stocks comes with risk. The stock market can be volatile, and the value of your investments can go up and down in the short term. It's important to have a long-term investment horizon and to not make investment decisions based on short-term market fluctuations. Example: understanding stocks for beginners. Let's say that you're a beginner and want to invest $1,000 in a stock. You do some research and find a company called XYZ that you like. You decide to buy 100 shares of XYZ at $10 per share. After a few months, the price of XYZ stock has gone up to $12 per share. You decide to sell your shares for a total of $1,200, which means you have made a profit of $200. This profit represents a 20% return on your investment. However, it's important to remember that this scenario is just an example, and that the stock market can be unpredictable. It's important to have a diversified portfolio and to not rely solely on stock investments to achieve your financial goals. Conclusion: stocks can be a good investment option for those looking to grow their wealth over the long term. By understanding what stocks are, how they work, and why they can be a good investment option, you can make informed investment decisions and potentially achieve your financial goals. However, it's important to remember that investing in stocks comes with risk, and to not make investment decisions based solely on news or emotions.